Hey everyone, happy Thursday, August 27th. It's a little bit before 1 p.m. on the West Coast, and it's time for another market update. We'll just get it out of the way. The first thing, like it has been for a while now, since the end of February, the war with Iran. It sounds like the U.S. is turning towards some options on the economic sanctions level to maybe try to get what they want out of this. I will say the market seemed to like that. I guess if we're we'd rather have them do that than bombing. As far as the markets are concerned, so at least that was received well, but still very unresolved, very all up in the air. Like we've talked about before, anything that threatens oil is going to have a negative effect on the markets, and oil is definitely threatened right now. But oil prices were coming down with this news, so that was good. And then the only other thing is not under war necessarily. I guess it would be a trade war would be Canada. It sounds like we are going to be instituting some tariffs on them. They're going to institute some tariffs on us. We could have a big long discussion on, are tariffs inflationary? Are they good for mortgage rates, bad for mortgage rates, that kind of thing. In general, tariffs can be inflationary, but if it led to a recession, for instance, that would be something that would be positive for mortgage rates. Because again, anything that slows down our economy, the Fed would have to cut their rates to stimulate our economy, and that's kind of what we want at this point. So, again, war on two different fronts. We have, what's going on with Iran, and now things have been heated up in a trade war situation with Canada, which again is not good. Just I know on the builder level, there's a lot of lumber and stuff that comes from Canada, so hopefully that gets resolved in a way that's fair for all parties. So moving on from that into some actual data we got this week. We got July's PCE, which is the Fed's favorite form of inflation, and a term you'll hear on the news and people keep referring to is inflation is still sticky, meaning inflation hasn't gone away. It's sticking around. So as you can see, the headline was up 0.2% and the core was up 0.2%. Both basically matched estimates. And that brought the headline year over year all encompassing number to 3.7%. And the core number, which takes out food and energy prices, that was at 3.3%. Keep in mind that the Fed's target with PCE is to get that core number down to 2%. So we are quite a bit ways away from that. And especially with it, as you can see, looking at that graph, things have stayed pretty elevated, above 2.75 into the threes for quite a while now. So it doesn't seem to be making much headway. And with everything going on in the world, everything going on with Iran and now with Canada, there's nothing that really makes us think that inflation is going to drop quickly in the next few months. So that is something to keep an eye on because again, the Fed is paying very close attention to that. Next thing we got was July new home sales, and like I said right there, not great. New home sales for the month of July came in at let me get myself out of the way, negative 10.5% for the month, down now 6.3% year over year. The median sales price was down a little bit. And again, just here, anecdotally, locally, I know that I've seen a lot more of the new builds having concessions on the lending side or price reductions and things along those lines. And that usually happens when the builders are having a hard time getting rid of their inventory. So these numbers don't paint a great picture of home sales for the builders. And like I said, they've been giving away a lot of concessions and letting people have rate buy downs and things like that. So you can just imagine if it's tough for them when they're able to provide that for the borrowers trying to buy these new development homes and stuff. How that is for people, normal sellers that don't have the ability to just give away $20,000 in builder credits or seller credits or whatever you want to call them. So not good numbers for new home sales, and again, that's going to have a lot to do with what's going on in the world and mortgage rates and so forth. Next thing, so June appreciation we got. So again, appreciation is always a little dated. So we're now coming towards the end of August, and we're getting these June numbers. And this is the Case-Shiller home price index, which is considered kind of the gold standard for appreciation, and includes everything. So month over month, seasonally adjusted, it was up 0.1% nationally. Non-seasonally adjusted, actually up 0.4%, bringing that year-over-year number to plus 1.5% nationally. And then if you notice that the 20 city index down there in the bottom right, up 0.2%, 0.4%, and 2.1. So all higher than the national averages. And that just goes to show you, when things start to slow down, they especially kind of slow down in the rural areas where there's not as many jobs, not all the schools, not all the hospitals, and things like that. So the 20 city index, which is a lot of the metro areas, those numbers have stayed a little bit more elevated than the national numbers, and that makes perfect sense when you think what people are looking for when they go to buy a home. But good to see they haven't turned negative yet with as slow as the market's been. Obviously, if rates came down tomorrow, let's say a couple points, and all of a sudden there was a buying boom, appreciation would go up pretty quickly. So that's something homeowners have in their back pocket, but that's also something to keep in mind on the buyer side. If you are not a homeowner right now, you don't care about appreciation because you're not making more. You need to buy a home, so they aren't really coming down too much, depending on your area. And again, if things did come down, you're thinking, hey, I'm going to wait for rates to come down. That would also probably mean the price of that home would go up. So just something to consider. So where does that leave us? The average 30-year conventional this week's at 6.75%. And previous week we were at 6.76. So not a lot of change. Just kind of staying right around here for quite a while now. It seems like a month or two. So again, not going to change much until we probably have some resolution with the war with Iran, in a permanent resolution, not some sort of temporary ceasefire or anything along those lines. Because the markets are very hyper focused right now on the price of oil, and really, oil comes down, U.S. Treasury yields come down, and mortgage rates come down right now. So, anything you hear about oil price, you could probably kind of connect that with mortgage rates right now for the foreseeable future. So, good to see we haven't gone up, but not good to see we haven't gone down. Important dates. So coming up, we got the BLS jobs report comes out September 4th. Then we get the next month of inflation for August. The CPI report comes out September 11th. And then the Fed meets September 16th. Right now, the markets have that at about a 66% chance the Fed does nothing. They keep their Fed rate where it's at. They don't raise it. They don't cut it. Which is good because previously that was getting closer to 50-50, where there was some thought that maybe they would actually raise the rates, which we would not want to see, obviously. So, and then the only other thing, I don't have it on here, but as far as important dates or things upcoming, we have tomorrow, I believe, starts the Jackson Hole Symposium, whereas a lot of the central bankers from around the world get together and talk banking, I guess, and policy, and where the world economy is, and things like that. Usually there's some press conferences and things that are held. Our chair will be there, of course, and will probably speak. So the markets, depending on what that person says or these different people say, that could be market moving. But the Fed has been under Warsh has been pretty tight lipped. So more likely than not, he will not make any sort of statement that'll be too market moving, but you never know. So that's also on deck for tomorrow. But if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you have a great rest of your week, everybody. Thanks a lot.